OVER-RSI strategy. Today's date, 19 July 2017 at about 7:25 in the morning. Follow me on my YouTube channel, Herman Tladi, or on Facebook, Herman Siaman Tladi. I'm not active on Twitter. So let's start. Every time when I do my analysis, I never do my analysis on the MT4. I just go to investing.com, then analyze on investing.com. After that, I only go to my MT4 to place trades. Reason being, I don't trust those guys. I don't trust the brokers. I don't trust the charts they give me. I don't trust the platform they give me. I don't trust the credit that they give me. I don't trust anything that is associated with these guys. And for reasons which you may know. So when I want to do my analysis, I'll go to www.investing.com. Yes, you can see I'm already logged in here, but you don't necessarily need to log in. You can just use it without logging in. So then I'll go to charts, then live charts, then live charts. You'll see it will show us a chart here. You see now we've got a chart. Yes. So I'll just go to the 4-hour. The strategy that we will be using will be 4-hour. But firstly, I would like to show you something. Can you see that here, if we check the time, it says it about the time here. It says it's about 01:15. The date is 2017 07 19 01:15. That is not South African time, that is New York time. So if I want to change this time, I'll just right click on my laptop, then go to time scale, then time zone, then I think it's Warsaw or Athens. Oh, it was so, yes. Then now I can go to my 4-hour. You can check the time is now 07:15, which is the valid time. So I think I'm used to taking to South African time. Then let us check how this is. So I'm gonna be sharing weekly videos with you guys with regard to this strategy. I personally think this is one of the most consistent strategies in the forex market. It's not a holy grail. It's not a holy grail. Many people have been claim that I claim that I have a holy grail. I don't. Even though I believe that someday I will, because I'm always studying charts 24/7. I'm always on my charts. Even now you can see I'm on my chart. So one thing that my math teacher taught me was that if you study something 24/7, you'll become the best at it. So give me 5 years. Give me 5 years. I'm pretty sure we will bring Wall Street to its knees. So for this strategy, we will need the relative strength index. If I want to add an indicator, I just go there, then scroll down. I know the R is at the bottom, so relative strength index. Or alternatively, you can just right click, then insert indicator. You see the same thing. So that is just a shortcut. I have got the RDCs. So I want us to go back as far as possible so that we will test this. I don't want us to see what will happen in future. I want us to trade as if we were trading live. I think LCH started being correlated somewhere around this time. Somewhere around this time last year. So these are the rules. The first and the most important, never, ever, ever, ever use a stop loss. Never use a stop loss. Some people will say, risk management. Hey, what reward ratio? Never use a stop loss. I don't care. 95% of traders fail because 95% of traders use a stop loss. If you can check the whole market maker strategy, the base of that strategy is a stop loss. Go up, take out those stops, come down, take up the stops, cash in, take out the stops. Everything is just stop loss. So it means if you remove the stop loss factor, those market makers will be left with nothing. So never ever use a stop loss. And mostly when people ask me, well, why don't you use a stop loss? My answer is always one and the same. When you go buy shares at Coca-Cola through the JSE or the New York Stock Exchange, you say to them, no, I want my stop loss to be at 40 rands or $10 per share, so that when price hits that level, I would automatically lose all my money. No. When you want to buy shares, you go to JSE or New York Stock Exchange, you buy those shares, then you keep them on you. Whether the market goes up or down, you keep them on you. Then after maybe 2 years, when the share price has increased in value, then you sell them back, isn't it? Nobody will say, but then you had a loss for 1 year. Your shares were not of any value for 1 year. Nobody will care as long as at the end you made money. So I believe that the brokers introduced a few things to make sure that the retail traders don't make money. Firstly, they introduced a stop loss. They told you that stop loss is risk management. We don't even know if they use stop losses. We don't know. Because every time, have you realized that every time when a bank crashes, they always lose all their money. Haven't you realized? They always lose all their money. It's like ABSA, there was a crash. Was it African Bank? Yes. I think they lost all their money. So why is it? If they are using stop losses, why are they losing all their money? So we are not sure. I don't want to lie to you guys and say this is how the banks trade. No, I've never been to a bank trading room. I don't know how those guys trade. I don't know if they use a stop loss or not. But my argument is, if they use a stop loss, why do they always lose all their money when something goes bad? When there is a market crash, why are they always the ones with big negatives? Why? Why are they the ones always running out of budget? Why are they the ones always claiming compensation, claiming to be compensated by the government, by the central bank? Why? So that is my argument. If they use a stop loss, then why do they always need help from those big banks when things go bad? So never use a stop loss. We will trade like normal investors in the JSE or New York Stock Exchange. You will get into the market, buy your shares, then get out. Another thing, always trade long term. This is not that strategy where you'll just get in at 5 and then get out at 9. No, we are not gambling here. Listen to me carefully. You are not gonna trade this strategy on a 1 minute time frame just because you wanna make $1 million before end of this year. Please. I know so far I have never ever met a consistent and profitable trader that scalps. Most of you have got this mentality that scalping is the real deal. 15 minutes time frame is the way to go. Yeah, you are sure? Yeah. 15 minutes is my thing. Guys, trade long term. It's very easy to make profits long term. Because even if the market goes up, imagine if maybe let's say you bought some around here. Can you see that? Yes, if you bought some around here, if you were only holding your trade for 3 days, you would have made a loss and then got out. But if you were prepared to hold it for 3 months, it means you would have had the opportunity to exit here, or to exit here, or to exit here. And if you sold still on that same point, still the same thing, you would have had an opportunity to get out here, or here, or here, as long as you trade long term. On the 1 hour time frame, 1 week time frame, the market is always ranging. So if in fact you can make money on the market by just selling at the top and buying at the bottom, as long as those support and resistance level are for higher time frames like daily and weekly. And then you just hold your trades. That's it. That's it. No magic. No magic. No holy grail. So always trade long term. I know you feel the pressure when some of these guys are always posting screenshots daily, 300% return for this for 3 days. But those guys, they play straight today, they make 300%. Next week, they blow them. That's what happens. So every time when you aim for 300%, that's what happens. They know. So you can't aim for 300% return. Every $100, use 0.02. So for every $100, use 0.02 lot size. As I said, I think these market makers or these brokers introduce a few things to make sure that the retail traders lose. And one of those is lot size. Lot size. They say to you, if you want to make money, come with $100 account. We will let you trade with one lot. You'll be trading as if you have got $100,000 in your account. What's that? What kind of nonsense is that? When you have $100 account, you must trade as if you have $100 account, not as if you have got $100,000. This is why people lose money. People have $100 accounts. They wanna trade like they have $100,000 account. They place 10 lot sizes, 0.15. 2 pips away, they are out. What? Next. Please. So for every $100, use 0.02 lot size. So it means if you have $300, you will place a maximum of 3 trades, each for 0.02. And this 0.02 lot size is advantageous because if the market, you are saying to the market that even if the market goes 50 pips against you, I will still hold that trade. Because I think 50 pips, I think it will be about $15. I'm not sure. Yeah. So you are saying to the market that even if the market goes 50 pips, 100 pips, 150 pips, 200 pips, I will still hold this trade. And this low lot size compensates the fact that we are not using a stop loss. So imagine if you're using 0.20 without a stop loss. So it means you'll get out within minutes. So this is very, very important. This is very, very important. Then obviously we use the 4-hour time frame. And the RSI, Relative Strength Index. This is by far my most trusted indicator. I know that most traders say indicators don't work. Hey, they are for newbies. Well, I agree. I partially agree with them. I partially agree with them. Indicators, I don't think that they work unless they mathematically formulated ones like Fibonacci. Fibonacci works. Fibonacci is everywhere. Fibonacci is everywhere. In a tree, there is Fibonacci. In your fridge, there is Fibonacci. On your hand, there is Fibonacci. So Fibonacci and RSI, I trust those two indicators. But I don't use them to enter the market, or I don't use based on my analysis on them. No, they are just confirmation tools. They're just, and you'll realize after a few minutes that the RSI, we don't use the RSI for buying low, selling high. We use it for something else. So I know most guys, when the RSI reaches the 70 line, they think of a sell. That's it. So most of the time we won't be using it for that. So it's RSI 14. So in order for you to trade this strategy, the market, the RSI has to be overbought or oversold. And I'd like to show you guys something. Can you see? Let's say you were here. My question is, here on the 21st of July 2016, was it the right time to buy or sell Audices? Was it the right time? The answer is it was the right time to both buy or sell. If you bought here, you would have made profit if you got out here. If you sold here, you would have made profit if you got out here. So it doesn't matter whether you enter a buy or a sell on the market. What matters is where you get out. Because obviously, if you bought here and got out here due to panicking, then you would have made a loss. But had you waited for a while longer, you would have got out here with profit. So it doesn't matter where you enter. What matters is where you get out. Whether you buy or sell here, or 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 here, it doesn't matter. Unless if you are at the top. And I don't know what could possibly give you a reason to buy at the top. Why would you buy at the top? Buy low, sell high. But I think the reason why most of you guys buy here is because you want to trade breakouts. You'll never be consistent through breakouts. They'll keep trapping you. They'll keep trapping you. Don't trade breakouts. If you wanna be a consistent trader, don't trade breakout. Because once you trade breakout, it means the market will just make it a tempting move. Like, hey, check, SIPO, I'm making a breakout. Then you'll enter. Then it goes down. Then what did you do? You bought at the top. You see now you're going against trading rules now. Those are not the rules for investing. You can't buy at the top. So I wanted to emphasize on that it's not necessarily about where you get in, it's about where you get out. Let me just remove this. So I said, for us to enter a trade, the RSI to be overbought or oversold on the 4 hour. On the 4 hour. So let me just go back again.